Joining us now, though, to talk about the market day, Michelle McKinnon from Klingman and Associates, and still with us, Nancy Tengler from Laffer Tengler Investments. I keep wanting to add an extra L in there, so apologies for that. But first, let's start with Mike Santoli. Mike.
Yeah, I mean, a pretty subdued day. I mean, Treasury yields down again. It's happened every Friday since the coronavirus scare began. We don't really know what we're going to get in 3 days of headlines, but market holds together because of the defensive and growth stocks. So high liquidity, slow growth translates into those groups leading the way. And I think on a net basis, investors are maybe wishfully or maybe just, knowing what we know right now, saying it's going to be a passing slowdown based on the China interruptions and all the rest of it. So hard to say if that's correct, but financial conditions remain as loose as they've been in recent years. And that explains why the market is comfortable near these levels.
It also explains the sort of odd combo of defensive and growth stocks being at the top of the market.
Absolutely.
Low yields.
Low yields, they're both kind of adjacent to bonds in terms of how they perform. It's long-term cash flows we can rely on. That's the way that you can unify those things.
All right, Michelle, want to get your thoughts on the markets here?
Yes, absolutely.
Especially given the fact that we had quite a bit of data today, and it was a little bit of a mixed bag.
It was, but I think to kind of answer your question of why are the markets looking forward and why are the markets okay going higher, I think it's the fundamentals. And let's face it, right, the U.S. economy is on good footing. We are growing at trend, right? The past decade, we've been growing at about 2.2%, along with a strong labor market and a healthy and happy consumer. And I think all those reasons tied in with the Federal Reserve being on pause and low inflation, markets can go higher.
Is it a happy and healthy consumer? Yes, the confidence numbers were good today, but that core retail sales number coming in at 0 was a bit of a surprise.
Was absolutely a bit of a surprise, but again, it's one data point, and I think when you look at the fundamentals, the other fundamentals, and also earnings, right? I think earnings, at the end of the day, right, the markets are slave to earnings, and if we can get 5 to 10% earnings throughout the year, that's good numbers.
Can we get that? We get 5 to 10%?
Yeah, I think we can. I think the top line growth has been pretty consistent, and I think you're right. I think we probably can see that, especially with the second half of the year weighing in, not necessarily in the first half.